So this stock came on my radar last night as I was filtering stocks in the Indian stock market. And I looked at the stock, I looked at market smith data, and I rejected the stock. And I want to explain to you why I rejected this stock. And as I have been repeating over and over and over again, your trading performance is not as much dependent on what stocks you buy. Your trading performance is really dependent on what stocks you choose to reject, because the market will keep throwing opportunities at you. Okay, you have to decide whether you want to pull the trigger or not. If the market throws 10 opportunities at you, you should be skilled enough to spot one or two which are the best out of those 10 opportunities. Okay, so the market is like a stream of opportunities coming at you. And the good part about trading and investing is you don't have to uh, take advantage of every single opportunity. It's like you don't have to attend every party in town. Okay, pick the ones which has the highest probability of success and then go ahead with it. So this is one of the opportunity that came across on my radar, and I said I don't want to get involved in this, and I will explain to you the reason why. Number one, if you look at the moving averages, the stock is trading above the 50-day simple moving average. The 50 days above the 150 day and the 150 days above the 200-day simple moving average. So this is clearly a strong uptrending stage 2 stock. That's a good point. By the way, this is Tips Industries. It's a media company. Now, next, is there enough consolidation? No, because you see the high of this candle is 783.75. This is 784.80. This is 784.95. So this is the highest uh, candle. The high of this candle is higher than other candles in this base. So if I start counting from here, 1, 2, 3, 4, 5, 6, there are only 6 candles after this candle. Okay. I want minimum 10 candles. So that it's there itself, I've rejected the stock. I don't need to look at anything else to reject the stock. But I will show you some market smith data where I looked at other factors. Maybe if this stock completes 10 points, okay, and maybe if this stock completes 10 candles and 4 points in the consolidation, maybe this could be become an opportunity. So that is why I want to show you more data about this stock. So I have rejected this stock for today's trading. See, currently the market is on. I'm not interested in the stock today, but after 4 days, it is going to complete 4 more candles. And if the stock remains in this range, and if other factors are in favor of this stock, I might jump in with a 5 or 10% position size. Okay. And which I will discuss later. If I buy the stock, I will wait for 1 or 2 weeks and then I will make a video. I don't make a video while I am buying the stock, because that would be like recommending, which is not correct. I don't recommend stocks. I don't give tips and advice and things like that. Okay. That is why whenever I'm buying a stock, I wait for 1 or 2 weeks before I make a video. Now, if a stock hits my stop loss during that, so I immediately make a video to inform you that, okay, I bought this stock, it's hit my stop loss, and this is the loss that I have incurred. So you can check the playlist called as My Trades. There is a playlist on my YouTube channel which says My Trades. There you will find profitable and losing stocks as well. As a professional trader, there will never be a state where all your trades are always profitable. You will always have winners and losers. And broadly, the ratio is going to be 40%. Okay, 40% winners, 60% losers. That this is the ratio of champions. Your ratio is likely to be 30-35%. So out of every 10 stocks you buy, 3 or 4 might go in your favor, but the remaining are not going to go in your favor. So if you hit 40% win rate, congratulate yourself. You are doing very well in the market. Okay. And this is fact. This is reality. You see, most of my trades are losing trades. Okay. But the ones that are profitable trades, those profits are financing my losses. Okay. The profit percentage is larger than the loss percentage. But anyways, coming back to this stock, it doesn't have 10 candles in the base. It does not have 4 points in the base. I might wait for 4 more days. And if other factors are in my favor, I might jump onto the stock. Now let's look at other factors. Okay, this is how it looks like. This is tips industry. Everything looks great. If all these lines are blue, it's fantastic. Okay, let's dig deeper. So, so outright we have rejected the stock because it's not forming a base. But let's look, did the stock form a base before this? So if I click here, you see this green dotted line. If I click here, that's a third consolidation. So this is base number 3, which means it has already come out of the middle stage. Remember what I told you? In stage 2 uptrending stock, there is early stage, middle stage, late stage. So the early stage and middle stages are over. Now probably the stock is in late stage, which means the probability of success keeps going down as the stock continues to go up, and the chances that the stock becomes volatile at the top goes up. The risk factor goes up. Okay, so even if I put my money in this stock, I might not put 10%. I might put 5%, or I might put 2.5% of my money in this stock because I am buying late in the game. Okay, this is number one. So now I get a clear view of the stock as to where I am buying the stock in its journey. Now, if this thing breaks out before even completing 10 candles, then I'm out. I'm not buying the stock because I don't want to buy extended stocks. It's like I missed the train. Okay, and I'm okay. I'm perfectly okay emotionally missing the train. I don't want to jump onto a moving train. If I jump onto a moving train, I will end up breaking my bones. I don't want to do that. Number one. Number two, you see this relative strength line is rising. Fantastic. But recently, over the past couple of weeks, the relative strength is falling, which means in the past couple of weeks, the market has been doing better than this stock. The market has been outperforming this stock. Okay. Now, 2 weeks is fine. If the 2 weeks the stock is not doing well, it's fine. Long term trend looks good. Okay. Long term from here till here, the stock has gone up. It has got 89 relative strength, price trend, which means this stock is doing better than 90% or 89% of all the stocks in the Indian stock market, which is fantastic. And in the long run, the relative strength line is going up, which is good. This small dip in relative strength line slope is okay because the volume is also declining. Volume declining is a positive factor in a consolidation. Okay. Next, let's see whether this stock qualifies as a positional trade or a swing trade. So if you see 61% latest quarterly earnings growth. So this is June quarter of 2024 versus June quarter of 2023. When you compare the quarterly result, this is that number. And Patrick Walker says that this number should be minimum 40%, which in this case is true. So the Patrick Walker criteria is satisfied. Fantastic. The average of these two numbers, as per Patrick Walker, should be 40%, or this number should be minimum 40%, which in this case is true. So both the criteria mentioned by Patrick Walker is satisfied, which is fantastic. We don't even need to look at the William O'Neill criteria. William O'Neill criteria says that number one, the earnings growth rate should be accelerating. Number two, the sales growth rate should be accelerating. Preferably, the latest quarter sales growth and earnings growth should be 25%. This is what William O'Neill has written in his book. This is what I have understood after reading his book. Okay, so this looks good. So this is like a positional trade. If the stock is creating the next base number 4, I might want to put 5% of my money in this stock, because from base 4 to base 5, that is at least 20% growth, and from base 5, and when it comes successfully out of base 5, that's another 20%. So I could expect a 50% return on this stock. At least that should be my target when I'm buying the stock. So if I'm buying at 800, then roughly 50%. So my target should be close to 1100, 1200 in the stock. When the stock reaches that level, I might want to book all my gains and come out of it and wait till the base resets. The base resets when the previous higher low gets tested. Okay. Now, base resetting is something which I will discuss with you later. but you understand how I am looking at the stock. You understand how I am looking at the journey of the stock. You understand why I am waiting, why I am not pulling the trigger right now. This is not the time to buy the stock. I am waiting. I will wait for 4 more days. Okay. And if it forms a nice tight consolidation, I might be in. I might buy the stock on the daily chart. I might not wait for the weekly chart. Okay. So next, the number of funds that have been holding the stock has almost tripled or quadrupled, if I have to say, which is fantastic. Every quarter there is a rise in the number of funds that are holding the stock. Fantastic. Management ownership is more than 50%. Fantastic. Return on equity minimum 17% we need. This is 71%. Super fantastic. Cash flow is positive. Fantastic. The 5-year PE range is 12 to 54. We want the current PE of the stock towards the higher end of the range, because generally that is the case for growth stocks. So the highest PE in the last 5 years is 54. Now it is sitting at 66. Fantastic. Okay. EPS growth rate 124%. Super. Accumulation distribution rating is A plus. That means very high institution demand. Group rank is okay because it's 38. I would prefer it to be less than 20, but it's less than 40, so it comes in the best of the best industries. EPS rating is 97, which means the stock has been doing better than 97% of all the stocks in the Indian stock market based on its EPS stability, consistency, and growth. Okay, which you can see in these numbers. Okay, more than 1,000% growth in the March quarter compared to the same quarter last year, which is 2023. Master score is 78. I prefer this number to be more than 80. Maybe there is some factor which is not allowing the master score to go up. I don't know what that factor is. But if you look at the earnings, this is EPS on an annual basis. From 2021 till 2024, in 3 years, the earnings per share has tripled. So if you go to the weekly chart, let's go to 2021, end of 2021. So let's go to December 2021 and see what was the stock price. So this is December 2021, somewhere here. The stock price was 158 and now it is at 730. So 158 to 730, that's roughly 4 times. So the earnings per share has gone up 3 times. The stock has gone up 4 times. So can you see the direct relationship between the price of the stock and the earnings? So sorry, the price of the stock and the earnings growth rate of the stock. The more the earnings growth rate, the faster the stock is going to go. That is the characteristic of growth stocks. Okay. As you can see, the stock started going up from here. What is this? May 2023. So by May 2023, I think the April earnings would have been out. So let's see April 2023. March earnings should be out. So let's see March 2023 earnings shows minus 89%. But probably there was more anticipation of June earnings. When the stock finally broke out here, oh, this is June 23. So June quarter ended. Before even the June quarter ended, the stock has started to go up. So probably could be inside information. Maybe some people knew about the stock. Okay. Maybe some news came about the stock. Maybe it received some big orders. I don't know which industry this is in. Okay. Tips industry is a media company. Maybe some announcement was made. We don't know. And suddenly the stock went from minus 89% to plus 59% growth rate. Or maybe this minus 89 is because comparing this earnings to March of last quarter. Maybe March of last quarter they did some extraordinary business. Okay, because of which this number is very much down. So you have to look at the numbers. March 2022 was 1.23 and then it went down to 0.14. Probably that is the reason why, but it is still positive. And look at the sales growth rate. Okay, fantastic double digit. Out of past 15-20 quarters, only one quarter it has negative, and past 15-20 quarters, only a couple of quarters the earnings has been uh, negative earnings growth. Okay, you see this March 2021 4,700%. So let's see March 2021. So this was a base. This was the fourth base. The stock came out of the fourth base in April. At this time, the price was 50. Now it is 800. So the stock has gone up 10 times. You see, after this much earnings, the stock has shot up 10 times in 3 years. So whenever you see an extraordinary, unbelievable number here, every time you see an unbelievable number here, the chances are very high that the stock might go up very strongly. Okay, and you see this very strong growth here. From 55, the stock went to almost 150. So the stock tripled in just 2 3 months. Okay, so can you see the direct relationship between sales growth, earnings growth, high return on equity on the stock price performance? So these are factors we have to look at if we are planning to take a positional trade. But if we are planning to take a swing trade, we don't need to do this much analysis. Okay, as long as the technical factors look okay, I would be interested in the stock. And as you can see, this is not a low volume stock. Remember, I made a video recently. I did not put my money in NetWeb Technologies because it had an average daily volume of 166,000 shares per day. But here we are talking like a couple of million shares traded every single day. So it's a high volume stock. It's not some penny stock. And the brand is very well known. Tips Industries, I have known this brand ever since my childhood. Okay. So it's not some penny stock or some small company operating out of some office with just 10, 20 employees. That's not the case. Okay. This is a big company. Okay. See, almost 10,000 crore market capitalization. That is sizable. Sales is good. Okay. Now, compared to the market, this could be considered a small cap, but the brand is very well known. The stock is doing very well in terms of earnings growth, sales growth. So I will wait for 4 more days. And if it sets up nicely, I might put 5% or 2.5% of my money in this stock. But let's see how things pan out. I'm keeping my eye on the stock. This is how I put some stocks on my watch list. And this kind of stock deserves a place in my portfolio, but not now. Okay. So don't consider my videos as some recommendation or something. I'm trying to discuss all the factors here which I am looking at. By the way, if you notice, I have not got into the details of the stock. No balance sheet, no profit and loss, nothing, because those are the things I will check after I buy the stock. Because these are the key factors which keep a stock up. Now, when a stock goes up, the question is, how long do I hold on to the stock? Then I start digging into who are the promoters of the company, who are the clients of the company, what product they are selling, what is the past 10 years sales growth, quarterly growth, margins. Are the margins expanding or are the margins shrinking? What is the competitive position of the stock in the industry? Those are the things that I will start to look at. And if majority of those factors are positive, I might stay in the stock for a long period of time. Or if I buy 100 shares, I might not sell 100 shares. I will always keep 25 shares. I will always remain invested in the stock if majority of the factors are in my favor. So this is my approach towards a particular stock. Another thing that I look at is how many shares are outstanding, and out of these, how many shares are in float. So as you can see, only about 5 crore shares are in float. Only about those, that many shares are available for trading, because you see 64 plus, assuming these funds are planning to hold the stock for a long period of time, 64 plus 8. So roughly you can say 75% of the stock is not available for trading. Okay. Only 25% is available out there, which is a good thing. A high volume stock with a small free float. Okay. It's a very good sign. Okay. We want we want the supply to be restricted always, so that when the price shoots up, it goes up very rapidly. Okay. And there's no volatility in the stock, because a lot of millions of shares of the stock are traded. So this is my argument. This is how I tell a story about a stock, when I am telling you a story about a stock, and while telling the story, if I'm getting a good feel of the stock, that's my intuition. My body is telling me that this stock is worth uh, keeping an eye on. So I will make a note of this stock, which I have not made yet. So while I'm making the video, I feel that this should be something that deserves a place in my portfolio. So let me keep an eye on the stock and let's see what happens. So that's my analysis on Tips Industries. As of now, rejected. Thank you so much.